Finances. It's one of those parts of adulting that we all have to figure out. It's a love it or hate it kind of thing, so I have to ask. Does the thought of money, taxes, or estate planning make your head spin? Do you embrace the budgeting and like to tell your money where to go? Or do you just kind of wing it and hope that you have enough to make it through till the next payday? These are actually really crucial topics for everyone to have a simple understanding of. And while I'm not a tax expert, I can tell you a few tips that I've learned in running my own business, what I've learned as a bookkeeper, and I can also share some of the secrets with you that tax experts have revealed to me. There are two tax systems in the United States, one for salaried W-2 employees and one for business owners, which includes small home-based businesses. I was so surprised when I learned that small businesses get more tax breaks than W-2 employees do. So let me explain. As a business, you get more tax deductions, resulting in paying less in taxes. And as a W-2 employee with no deductions, you're giving up 40% of your income in just taxes. It's insane. So that was an incentive for me to begin my home-based business. So I want to run through two scenarios to show the two tax systems and their difference in your tax obligations. The first one, a married couple with an average household income of $60,000. With one W-2 income, ends up paying $10,740 in taxes, which leaves them a take-home pay of $49,240. Zero of their living expenses are tax deductible, and now consider that the average cost of living is $53,000 a year. So that leaves this married couple with a negative balance of $3,740. It's no wonder families are going into debt every year and why money remains the number one stressor for most marriages. In the second scenario, we have the same couple. The husband is still a W-2 employee earning $60,000, but the spouse started a home-based business beginning at about $500 a month or $6,000 a year, bringing their total income to $66,000. Now they're able to write off $25,000 in business expenses. Notice that living expenses are converted to home business expenses: phones, internet, meals for meetings, travel, paying your kids for help, partially writing off your home office, and mileage on your car. It all adds up. This couple reduced their tax obligation to $7,185, making their take-home pay around $58,000. Again, consider the average cost of living $53,000, and now they have a positive cash flow of almost $6,000. What a difference a home-based business can make. So to recap, the first scenario ended with a negative cash flow of $3,740. In the second scenario, they ended up with a positive cash flow of $5,815. Now, doesn't that make it more fun to talk finance? Here's the work involved in a profitable home-based business. Adding income activities, producing activities for a minimum of 45 minutes per day, 3 to 5 days a week, tells the IRS you're treating your business as a true business and not just a hobby. So you can see that it's not only how much you make, it has everything to do with how much you keep. For me, Young Living was obvious because I already wanted the products for my family. So if this makes sense to you, let's get going. Launch your business today with the purchase of one of Young Living's premium starter kits, and guess what? That starter kit can be your very first tax deduction. Now, that financial talk wasn't so scary, was it? Just keeping income makes sense. The tax information from this video can be found from Courtney Epps' book, More Relaxing, Less